This is not the fastest slide presentation, but, and the thing is, I'm going to trying to create this content is difficult, just because the whole credit world is kind of an anomaly for a lot of people. You're here today to try to understand credit, how to build credit or improve your credit if you've had some bumps in the road. So Caitlin, this is Caitlin. She goes by Kate and I am Laura. We work for a company called Guaranteed Rate. They actually changed their name to Rate, but I hate it, so I always have to say Guaranteed Rate because you need two words together. We are local mortgage professionals, so we specialize in first-time home buying, renovation loans, and we try to do a tremendous amount of mortgage education because we really feel like there is a lot of lack of knowledge of the mortgage process and even mortgage products, and my parents were both teachers, so I have a huge, education is huge for me. My father always used to say, knowledge is power. So our goal is to help navigate anybody through the home financing process with confidence. Our disclaimer, we're not accountants. I'm not associated with any debt consolidation. We're not related to Experian, TransUnion. My expertise is I've originated for 20 years. I've looked at a lot of credit. I've helped a lot of borrowers rebuild credit. I've seen a lot of mistakes that people have made with credit, which is kind of how we came about this course today. We are located at 886 Columbia Street, which is diagonal from the Columbia Memorial Emergency Room. And so the agenda today is, what is a credit score? How credit works, how to establish credit, how to improve your score if you have not the best credit, what not to do, common credit myths, and you have the handout, the free resource guide. I'll go through it really quickly, but that is really, really, really good links to go to. So what is a credit score? It's a numerical representation of credit worthiness referred to as a FICO score. There are 3 major credit bureaus in the US, Equifax, TransUnion, and Experian, all of which are used for a variety of different reasons, such as providing a credit report. But why does credit matter? It affects your buying power. It's absolutely, your credit score affects any interest rate. Student loan, car loan, personal loan, certainly a mortgage. Rentals, if you've ever had to apply for a rental and they wanted to do a soft credit or a credit check, if you don't have the best credit, that landlord's looking at you a little tougher. And even some employment opportunities. There are some employers out there that will ask, and obviously with your permission, they're going to ask to do a credit pull. The credit scores range from 300 to 850. If you have an 850 to 800 to 850, you're considered exceptional. I can let you know that I look at a lot. It's rare that I see an 8 to 850. But that's best interest rates, easiest approval. 740 to 799, that's where a lot of people lie, very good. So it's better than average approval rates. 670 to 739, you're still good, we're still okay. You qualify for most loans, rate's going to be okay, and this is across the board with your auto loans, your personal loans, and your mortgage. When you get into your 580 to 669, here is where it's fair and your interest rates are higher. The underwriters or people who are approving your loan are going to look at you a little harder, maybe ask a few more questions. And the 300 to 579, very difficult. Limited credit opportunities, and it's considered a very high risk. So what are the credit bureaus? Credit bureaus are agencies that collect and maintain data on all of you. The consumer, which is you. Lenders, credit card companies, and other financial institutions report your credit activity to these bureaus monthly, but they only report once a month. So for instance, all mortgages traditionally report at the very beginning of a month, because everyone's either making their mortgage payment on the 15th, but you have until the 30th to make the payment. Same thing with credit cards, same thing with auto loans. So a lot of times when I pull a credit report on someone and I'll be like, You have a MasterCard, it's a $5,000 balance, and people go, I just paid that off. Like, I just paid that off. It's not going to reflect. If the credit bureau chimed in for the month of March, it won't reflect until April. Companies only report in once a month. Every bureau may have slightly different information. For instance, Equifax is the creditor, the credit bureau that is pulled the most. You want to apply for a Kohl's credit card, you want to apply for a Citibank, you want to apply for anything, Equifax is the one that's pulled. So usually when I look at people's credit, their Equifax score is low. It's the lowest because it's the one that's constantly being pulled. TransUnion skews borrowers' information very different than these two. They look more at payment history, but each bureau, because people say, well, why are my numbers different? They're viewing you differently. Do I know how they're viewing you? No. I don't even think they can tell you how they're viewing you. It's an algorithm. Each bureau uses an algorithm. How does credit work? This is huge, this pie. And we're going to dive in. 35% is payment history. 30% is credit utilization. 15% is length of credit history. 10% is credit mix. And 10% is new credit inquiries. So we're going to go into what's payment history.
They're all up there.
They're all up here. So this is payment history. This is 35%. This is the big one. Payment history is, do you pay any of your cards, student loan, anything, on time? Later missed payments, even if, like, the hardest part is, even a most recent, I forgot to make that Kohl's payment last month, your credit is going to go down because it's a recent missed payment. Even one missed payment can significantly drop your score. So for this payment history, consistently paying on time is the best way to build your credit. The next one is 30%. It's there. Credit utilization. This is a percentage of the total credit available that you're using. So look at it this way. You have a credit card. It has a limit of $10,000. Your utilization should be 30% of that. So keep your limit, your balance, to $3,000 if you can. I always say if you can. If you really, really, really want to improve your credit, try to keep it to 10%. So whatever the limit is, keep it to 10%. A lot of times, a lot of financial analysts will say 50% is good. Going a little bit lower than that, 40%, 30%, you're going to just watch your scores come up because you're utilizing your credit effectively according to the bureaus. Do not pay your credit cards in full. Do not pay your credit cards every month off. Keep a small revolving balance. You want to show the credit. If you pay it off every month and that card types in zero balance, zero balance, zero balance, zero balance, the credit bureaus don't know that you're using it. So you're not, they're all about, I really like you, I want to continue to like you. I know, see, you do, like they want to see that you can build the credit worthiness. So a lot of times I have borrowers who say to me, cash is king. Cash is king. In the real estate world, only on purchase, only on offers. But in our world, in America's world, if you go over to Europe, they don't have credit. But for us, we're dominant on credit. But they don't tell you, keep a small revolving balance. That's part of your credit utilization. It's coming, Caitlin.
Can I ask you a question?
Sure.
Did the 30% of your available credit, can you talk about how that relates to basically the time that the credit's pulled? I know there's, your bill is generated at the end of the month, and a couple days before that, they basically assess what you owe. Are you saying that by the time they do that poll of like, here's what the month you owe for the month, it should be below 10%, or over the course of the whole month?
It should be.
You should never use more than 30%.
You should keep your limit to 30% you should keep your balance 30% of the limit. So if the credit card says your limit is 10, keep it at 3,000 or lower.
In sense of never spend more than
Right.
a month?
Right. Or, because the hard part is, like, you have a lot of people with open Amexes, and open Amexes, you can charge whatever you want. But when you look at people's open Amex accounts, the limit is 10,000. They owe 10,000, and according to the credit bureaus, it's a ding sometimes, and this is where it's going to be like length of history and how long they've had it. If a young person has an open Amex, that's going to really negatively affect them because they're maximizing the limit all the time.
But let's say I had the $10,000 limit, and I made a purchase of $7,000
Mm-hmm.
that needed to make it. Do I then pay down 4 of it?
Yep. The very next day.
That's what I'm asking. Is
Yep.
Does the
You want to catch them before they you want to catch them before they report in. But the hard part is you don't really know when they're reporting in. It's all just automated. But yes. So sometimes people will say, especially, hey, I want to get my airline points, or I want to get my points, so I'm going to charge a tremendous amount. The very next day, pull the money from your savings account and put it on there. They're none the wiser. A lot of people do that because they get free miles. Yeah. Yep. So the length of credit history. This one is one that people do not realize. I'm 55. I've had a credit card since I was 25. That I have a massive length of history. I don't use it. It's just I have a very small balance. Like I charge on it and I just pay the minimum. But I have all those years of positive revolving. The worst thing that you can do is close any of your credit cards. If you don't want them, just cut up the card, leave it open, even if it's down to 0, but closing those cards is now shortening your credit history. Like I don't have any active credit. I have debt, but I don't have any active credit cards. I'm just keeping them all open, and I'm keeping small balances. I haven't even like re-upped my cards and stuff. But I made the mistake, and I did it too. I was so annoyed at this one credit card company. I'm like, I'm closing this account, and I did it, and I was like, there goes my score. Like my score went down because I closed the credit history. Young borrowers should start building credit early with a secure credit card, which we will go into, or become an authorized user on a credit card, which we will go into. And then the next one on this pie chart is credit mix. So credit mix, and it is hard, the credit bureaus want to see credit cards, auto loan, personal loan, student loans, mortgages, a mix, a variety. So when people really are trying to, hey, I've had some really bad bumps in the road, my score is 480, but I got a secure credit card, it's going to take a very long time for that score to come up. What I say to people is jump on someone, hey, I know you, and I'm like, hey, I had 25 years on that card. Do you want to jump on? I can add you as an authorized user. There's ways that you can try to work to rebuild the credit, but lenders like to see that you can handle multiple types of credit. So that's credit mix.
Laura, so if somebody is trying, let's say in your family, to build their credit,
Mm-hmm.
is it good then to put them on one of your solid credit cards, and then that will help their?
Correct. However, if you go near the limit, 10,000, and you're constantly, like he just said, I'm going to make a large purchase, but you're not paying it off right away, that could be detrimental. But if it's like, hey, I have this card, it's 10,000, I've had it years, I can add you an authorized user, all of your positive will help boost them. Yeah.
So then why does your credit score drop when you apply for a new card or like open a new account? Is that because you're paying new credit inquiry, or is that because you have such a young, there's like no maturity on that?
Both.
Okay.
It's because you have a new hard hit,
Okay.
and also you now have applied for something, so the credit bureaus are going like this.
Right.
We're waiting, we're watching, what are you doing? So your score is going to go down, give it a couple of months, it'll start to come back up. Same with mortgages. I always say to everyone, don't hyperventilate, you're going to be fine. You just have all of a sudden, boom, a $200,000, $300,000 liability has shown up, and the credit bureaus are going, well, we're gonna watch and wait. What are you doing? So,
Can I ask a follow-up to that?
Sure.
So if you have a larger down payment on a mortgage, for example,
Mhm.
does that offset or like somehow, like the, or I guess it's, the loan amount is just smaller?
The loan amount's going to be smaller. It's still a hit.
Yeah, but it won't be.
As hard, like, so for instance, because I've had 2 mortgages,
Yeah.
I've had auto loans, I've had various credit, it won't dip as much. I've utilized different kinds. So your young borrowers, you will, but it'll come back up. Like I say to people, don't miss your mortgage payment.
Okay.
And then last part is new credit inquiries. So new credit inquiries are, how many hard inquiries have you applied for? Too many applications, walking into a car dealership and saying, I really love this car, and they say, well, let me see if I can, what rate I can get you. They're running you through 5 to 7 different lenders. They're all pulling your credit. You're gonna see, the credit bureaus aren't gonna go, oh, she really likes that car. The credit bureaus are going, wait, there was just 5 to 7 hits on this credit. What's going on in this person's life? The other thing that I say to people is, when you receive multiple credit cards, or if you're out shopping, you're gonna go to Old Navy, and you're gonna go to TJ Maxx, and you're gonna go to Kohl's, and they're always gonna say, do you wanna sign up for the credit card? You can use 20%. If you did that, all 3 stores, your score is gonna go down. So what we say is, only apply for what you need. Soft inquiries, shopping for car insurance, shopping for renter's insurance, shopping for homeowner's insurance, getting pre-approved for a mortgage. Most mortgage companies do a soft credit pull. That is not a hard hit to your credit and will not reflect on your credit report at this time. So if you do not have any credit, how do you establish credit? The first thing that I tell a lot of people is get a secure credit card. What is a secure credit card? It's a type of credit card that requires a cash deposit from you to hold what is it? It's a refundable deposit, usually equal to your credit limit. And that way, what happens is you're using your own money via a card to work to establish credit. The worst thing that I've seen people do is they get the card, it's a $500 limit, and they charge $495. And they say, well, the woman on the phone told me to do that. It's like, yes, because you're paying all the interest to her. The other thing that I say about secure credit cards, or any type of credit card, if you're trying to rebuild credit, forget the interest rate. The interest rate is the interest rate. Your name of the game, if you're trying to buy a home or rebuild credit, it doesn't matter the interest rate, just use the card correctly. If you make on-time payments, a lot of times what will happen is the issuer, like Capital One, has a great secure credit card. They're gonna say, you no longer need this, we're going to give you a regular credit card, here's your money back. So the secure card is you're securing it with your own funds. If you have been in default with Capital One or another creditor, they're not giving you a secure card, so you have to look around. The other thing you can do, easily open a store credit card. That's another way. Kohl's. Don't go to TJ Maxx. It's not worth it. They do not have it's really not worth it. Kohl's is a great one. Old Navy is a great one. The one thing that I really love about Kohl's, you can, and if you're a Kohl's person, and they say if you use your Kohl's card, you can get like extra Kohl's cash, but you can also get extra coupons and stuff. You can use the card, turn and go to customer service, take your debit card, and just pay the card down. Like all in one trend, so you get the benefit of using the card. And a lot of times, store credit cards are they're skewing you very, very lightly. They want to give you the card. But it is a really good way if you keep the balance low, it's a really good way of building credit. So here's another one, becoming an authorized user on a trusted person's account. Trusted person's account. That's the key word. Trusted. An authorized user is someone who is added to another person's credit account, most typically a credit card, with permission of the primary account holder. Authorized users can use the credit card but are not legally responsible for paying the debt. So Did you hit it? Okay. So how an authorized user works. Here I am with my 20 years with one card. I decide to help Caitlin out. I add her to the card. A lot of authorized users will say, I'm just going to give you the card back. I don't want to use it. But she does have the right to keep the card. A lot of parents do it for kids going to college. I'm the one making the payment. She's, though, on her credit report, if I've had the card for 20 years and made the payment and I have a really low balance, she's benefiting from that. So the primary is allowed to access the card, benefits from all my payment history. The authorized user, she doesn't have to make any payments. That's my responsibility. And it can help build credit, especially if it has a long history and on-time payments. So those are all the benefits. Credit building, not responsible for the debt, and access. Sometimes the authorized users can access the credit card perks. Your risks, this is why it has to be a trusted person. Negative impact on your credit. If I miss a payment, my credit's going to go down, but she's taking the hit too. I can remove her at any time. I have the right as the primary person to say, love you, Caitlin, we're parting ways. I'm removing you as an authorized user. Now she's lost the benefit of all the credit history. She has limited control. She's not allowed to call and say, I'd like a credit increase. She can't, the only person that can do that is the primary card holder.
Does the credit increase affect your credit at all?
If a credit, what's going to affect it is if you ask for a credit increase, but then the balance goes up because, hey, I'm going from 10,000 to 20,000, but I keep the balance the same, no, that's perfect. But if it's like, hey, I know that I need to make a large purchase, I'd like to go from 10,000 to 20,000, but then I'm going to charge up 18,000, that's where you get into, it's hard. Co-signing, I hear this all the time in the mortgage industry. When I say, oh, this is what I'm seeing on your credit report. Oh, I just co-signed for that person. Co-signing means you're equally responsible, 100% equally responsible for the debt. It does. So a lot of times people go, no, it doesn't. I just co-signed. You are equally responsible. If you co-sign on an auto loan, you're equally responsible for making that payment. If she doesn't make the payment and we're on a car loan together, like my niece wanted to get married. She needed me to co-sign on a loan. I said to her, because I'm a mortgage person, I have to pass a financial fitness test every year. We have to get fingerprinted. We have to do all of this. Don't ask me why my fingerprints change. But I said to her, if you ever cannot make this payment, I'm not going to be angry. I'm not going to be mad. I'm not going to say anything, but I'm going to make the payment to protect my financial history. So how being a co-signer work? Lenders require a co-signer when the primary borrower has low credit, no credit, or not the correct income. We have a lot of self-employed borrowers in this county. We have a lot of people who deal in cash. Their tax returns, as a self-employed person, are you really reporting all of your cash? But can someone afford a payment? Yes. That's where a lender would say you need a co-signer. The co-signer's credit and financial history help the borrower get approved. The loan is in both names, and if the borrower misses the payment, the co-signer's going down with them. So the benefits are you can help a family, a friend or a family. My credit might improve, because I'm on with her. And the borrower might receive a lower interest rate, especially on car loans. The risks are she doesn't make the payment, I have to make the payment. She misses a payment, I'm getting hit too. Full financial responsibility, credit score impact. If it's her car loan, but I decide that I want to buy another house down south, I now have a liability that could affect my debt to income ratio and my ability to get another loan. And the last thing that no one ever understands, it is almost impossible to remove a co-signer off of any type of loan unless you refinance. The lender has to give approval, and traditionally 9 times out of 10, the lender's going to say, no, refinance. So then you're starting a new loan again.
I have a question about that.
Sure.
So someone co-signed on a loan, right? And long time ago. And then said, you know what, I'm gonna free you from that loan. You don't have to ever pay me back, right? If that's something that's in the letter sent to the bank or whatever, doesn't that release you from the, how do you get released from that?
Well, if the loan, like for instance, on the one that I did with my niece, it just went to full term. Like she paid it, like she made the payments and went full term. Are you saying the loan isn't, are you saying the loan is still there and you want to remove yourself off as the co-signer?
Not me, the other person wants to remove themselves. The co-signer wants,
So
what happens if a co-signer says, I'm cool now, right? I'm gonna pay this all off, and I'm gonna relieve you. I'm just gonna relieve you from this relationship.
you'd have to refinance. If one of the co-signers wants to come off and it's not tied to the credit report or anything, you can call the lender and say to the lender, I can make this, I want to do this. 9 times out of 10, they're going to say, refinance it. If it's an auto loan, refinance it. If it's credit cards are always usually authorized users, but like with a mortgage, you can do a release of liability on a mortgage. In a divorce case, per New York State law, you can't do that. But most lenders are going to say, okay, refinance. Yeah. So here, benefits and of being an authorized user co-signer, legally responsible for the debt. Co-signer, yes. Authorized user, no. Helps build credit, yes for both if the payments are made on time. Can use the credit account, yes. Can easily be removed, no. Yes for the primary.
I have a question about an authorized user on credit card. So if your trusted friend, family member allows you to be an authorized user and then takes you off, does that harm your credit when you're taken off because now your available balance goes back down?
Now you don't have the length of credit history. The only thing I don't know, and I forgot to research, I thought about this, I don't know if when you get removed off, if it shows as a closed account on your report or if it's just automatically removed. That's the only thing. And I was thinking about that today. It's the only thing that I don't know.
That was my question. So I was on as an authorized user and I was removed from the account, but it still comes up on my credit score that I'm an authorized user and I have my credit maximum, I guess,
Yep.
is higher than what I have currently, like in real life.
If you want to remove that from the bureaus, call the bureaus and tell them that you've been removed off as an authorized user, and they should remove you off. They'll yeah. I mean, if somebody removed you off as an authorized user, it should reflect. If it didn't, I would contact on the frequently, those 3 bureaus on there. I would do that. Yep. So a recap before we move on: how to improve your credit scores, pay your bills on time, keep your credit utilization low, maintain your old accounts, diversify your credit type, limit your hard inquiries, and regularly check your report, which you can do every year. You can do a free credit report. You can do credit monitoring, the whole 9 yards.
And your credit doesn't go down for checking?
No, that one is traditionally like a soft credit pull when you're checking your own, like freecreditreport.com. It's just, So if you do.
Sorry, can I ask another quick question?
Sure.
Limiting the hard pulls. When you say limit, was that 1 per year, 2 per year? Is there a suggestion? What is that? Is there like a numerical value that you can?
I don't know the numerical value, but it wouldn't be like for instance, I'm going to shop and I'm going to go to Kohl's and Walmart and Old Navy and all 3. I'm doing it all and I want to get all the benefits. I wouldn't do that because it's 3 inquiries hitting on the same day.
Okay.
So I would stagger it.
Stagger them. Okay.
Yep. And if you're like for a car loan, I would say to the car dealership, if you haven't gone to your bank, please just put my stuff through one lender, especially if you know you have really good credit.
I see what you're saying. Okay, yeah.
So how to read a credit report, this is the thing that people don't understand on a credit report. It has everything. It has so much personal information. And a lot of times borrowers will say to me, will you email me my credit report? And I say no. Because 1, I don't have a way to password protect it, and 2, all of your information is out there in cyber world. But it has your name, current and past addresses, social security numbers, date of birth, employers, if when you were applying for something, and they asked you who you worked for, it's all on there. You need to look for any name, address, social security numbers that are incorrect. Incorrect information could mean that somebody might have gotten your identity. It's also going to list all your credit accounts, credit cards, any credit that you have. Be mindful the account numbers on the credit report will not, they traditionally do not match. So like for instance, when we do a credit report for mortgages, and a borrower will say, I don't have that account number. It's a derivative of something. It's to protect. The reason why they don't sometimes tell you the full account number, it's just to protect you in case somebody got a hold of it. But so it'll give you your balance, your credit information, your payment history. Is it opened? Is it closed? It's going to tell you everything. Check for unfamiliar accounts. Hey, I don't know what this account is. You're more than welcome to call the bureaus. You can even call the credit card company. You could call, like for you with the authorized user where it was closed, you could call the company that had the card and say, I was removed. You need to report this accordingly. Make sure the payment history is accurate and ensure that old accounts still show up. Your credit inquiries are going to be on here. It's not forever. Usually it's like 90 days or 120 days, but you're going to see the people who have checked your credit. Are there some companies that will check your credit without you knowing it? Sure, they do. But you can, you want to make sure that you're kind of limiting it or watching it. If you see a hard inquiry and maybe you didn't authorize it and you really don't know what it is, you can report it to the credit bureaus. You can say, this information is inaccurate, I don't know what it is, who pulled it. Too many hard inquiries in a short period of time can lower your scores. Your public records are on here. We see this a lot with mortgages, judgments, bankruptcies, foreclosures, tax liens. It's all on your credit report because this is a matter of public record. So when borrowers say to me, I didn't know that I had a judgment, you knew. You forgot about it, but you knew it's a matter of public record and you received a lot of documentation. Bankruptcies can stay on for 7 to 10 years. Bankruptcies can stay on for 7 to 10 years. No, you're good, you're good. So, and then the last thing is negative information. And so this is where an underwriter is going to go on the report. So when you look at a credit report, it's a lot of data. But you're going to, all the positive and the feel-good stuff, but then, and sometimes like an underwriter, like especially with mortgages, we're human, like the underwriter will say, I need an explanation of this. And I'm like, where did you see that? She was like, it was buried in the credit reports because your negative information goes last. This is late payments, charge-off, collections, accounts that are in collections that have been sold. If you have paid a collection account and it still appears as unpaid, dispute it. Dispute it. You can dispute anything. They're going to ask for the proper documentation. So what I say to people is, if you have something that you paid a collection, keep the proof. Keep the proof. Because what I say to a lot of borrowers is, it takes seconds for a company to put you in collections. Could take an eternity for that company to remove you out. They don't care. So you can say to the credit bureaus, hey, this is my paid receipt. They have 30 days and they'll render a decision. What else we got? And then it also shows you your FICO score or your Vantage score. Some of them do, not all of them. And a breakdown, it's going to tell you what is affecting your score. High utilization, missed payments. If your score is lower than expected, really dive into the report to figure it out. See what your limits are, see what your balances are.
Laura, out of these on here, what would you recommend that if you wanted to check your?
The free credit report is good. A lot of people do, and that's the one at the very top. You can do a free.
Experian free credit report?
Yep. You can do one a year. You can also pay to have your scores. Like I have a lot of borrowers who pay to have it monitored. This is an interesting thing. So, we didn't put this in the report or this presentation. Just so you're aware, credit, personal loans, auto loans, student loans, mortgages, all skew your credit differently. So a lot of times people will say, I have Credit Karma. My Credit Karma is showing that I'm at 740. Well, they're monitoring your credit card information. It's a credit card repository. A mortgage, think about this, this repository, okay, we're going to give you a credit card of $5,000, but we're going to give you a mortgage of $300,000. This one is skewing higher. So a lot of times when people say, oh, my credit's good, Credit Karma says it's 740, you're probably in the mid-sixes. Whatever you're trying to do, the repository of what you're trying to do is going to skew you harder.
Can I also just quickly ask you the first one? Do you recommend that?
Which one is it?
Annual credit report.
Yes.
Is free credit report.
That's the one that you can do. That's the annual credit report free. You can do, that's the one that I would do.
Oh, that one.
You can do it free if you want to check it, and I get into why you might want to check it when we get into debt consolidation companies. You can pay then to keep kind of updating your report, but the way that it works is every consumer can get a free one every year, and people should. Checking my credit hurts my score, only hard inquiries do at this time. I should close old accounts, keep a shorter balance. Income affects my credit score, has nothing to do with it. It has to do with your repayment. What not to do? Don't max out your credit cards, avoid making late payments, don't apply for multiple credit cards, avoid co-signing for loans unless necessary. Don't ignore your credit report, regularly monitor, and don't go into collection if you can.
I have a question. So regarding maxing the credit cards, some credit card companies, they give a promotion, like 0% APR, right, or balance transfer. So how do you deal with, like, you still can't max it out?
If you do, and that's the whole kind of the benefit of a 0 APR or 1% APR, you want to max it. You just have to realize your score is just going to go down until you start. It's not going to, it depends on how old you are and how much you have. Like I have a 0%, and I love it because I can transfer things over. But I do watch my score when I'm getting low and I want to put something else on it. I've now brought the balance back up. I'm going to see a dip in score. But it's still, that is a cost savings thing though. That's like totally worth it. So the pitfalls of debt consolidation, I'm just going to say, in case like because I have seen it and heard it all in the mortgage industry, I am 99.9% against any type of debt consolidation because I think they're money grabbers. So I'm giving that caveat. I have a little bit of a tone. Debt consolidation companies promise to help you manage your debt by combining multiple payments into one monthly lower payment. While this sounds appealing, there are many potential pitfalls. First things, there are high fees and there are hidden fees. So that's just the name of the game. Many debt consolidation companies will include 1 to 5% origination fee of the loan amount. There's a monthly maintenance fee. And if you're going into a debt consolidation, you're into it for a certain period of time. Could be years. Another alternative is instead of paying a company to consolidate, grab your credit report, see if you can figure it out. If a family member has a 0% APR, hey, can I use, look for ways instead of paying, because you're paying for this. And the ones that I've seen, the debt consolidation companies that I've seen, they don't pay the cards and your scores stay low. You have to, I one time pulled it and this woman had lates on all 4 of her cards. Well, she was making one payment, they were applying it to the one payment and didn't apply it to the other ones. She was none the wiser. So you just really need to kind of know that. There are higher interest rates, while the overall monthly payment is low, if I add up all my credit cards, it's $700. I can pay this debt consolidation company $150. The question that I would be saying to the debt consolidation company is, if I'm giving you $150, are you negotiating with all of my other lenders that if I owe $200, but I'm only giving you $20, you're not throwing me into lates or collections? A good debt consolidation reaches out to the lenders, comes to a mutually agreed upon, and all of your money gets distributed. The other thing that the debt consolidation companies do, that you could do this on your own, people get excited. The first thing that they're going to tell you to do, dispute it. Dispute any of your credit cards. I wasn't late. I'm going to dispute it. What happens when you dispute it, your score automatically comes up. because you're saying, I didn't do that. So then the credit bureaus go, oh, all right, we don't know who to believe. So she says that she didn't do it. So, but then if you don't really know what you're doing with the debt consolidation and are they paying, your score is just going to stay right there. Instead of consolidating, focus on paying down your debt using the snowball or the avalanche method. So the snowball avalanche method is whatever's the top card, or whatever's not the top card, whatever's the lowest card that you have. Hey, I have a I don't even JCPenney's, Kohl's card, it's $500, I owe on it. I'm going to pay $100 until that's gone. Once that's paid off, what a lot of people do is, I have $100. I can go to the grocery store. I'm going to go out, I'm going to go to the movies. You should take that $100 and put it to the next one. Then once it's paid, it's called the snowball or avalanche effect. The other part with debt consolidations is sometimes the debt consolidation company wants collateral. We want you to pledge your car. We want you to pledge your house. Don't do that. You miss a payment or something happens, life happens along the way, you could risk your home, you could risk your car. If you own a home, maybe try to apply for a home equity or a personal loan, or once again, do that cosigner, somebody that's got good credit, help you out. The other thing is you do have a temporary drop in credit score. It is a hard inquiry. And they will close your old accounts. Instead of closing the accounts, like I said, pay them off, keep them open. I'm good. And then the hardest part, I've done a mortgage for a borrower 3 times to pay off. She's refinanced 3 times to pay off credit card debt. You do not solve the root of your problem. You have a spending problem. I get it. Life happens to people along the way. I get it. I totally get it. But you don't learn from bad behaviors. Have we all been victim of it? Absolutely. Absolutely. But if you build a budget and you stick to the budget and you realize you can really change your ways, that's better than doing any debt consolidation company that you're going to pay for. And the other thing is you'll feel empowered that you did it on your own. Because every single person can really repair their credit if they know what to look for on a credit report. And even as we leave this class, our contact information is there. If you do pull your credit and you're like, I have no idea what the hell I'm looking at, reach out to me. Don't email me the report. You can, but make sure there's no sensitive. I don't know how to read this. I can probably tell you, I can figure out how to read it and I can educate you. So just if you leave here today, you can keep my contact info. But realize most debt consolidations make false promises and use misleading tactics. They charge upfront fees, which is illegal, but they can do it. And others fail to make payments on your behalf, which is what I saw from many people who are like, I thought that they were paying the bill. Well, they didn't negotiate with the credit card companies to accept a lower amount. And so work directly with credit. A lot of, if you have a credit card and you're having a hard time, it's the same thing with the mortgage business. I had a borrower she bought a house last year and she said, I've fallen into a hard time. Can I do it's called, I can't do it, but I put her in touch with my company and they did a loan modification. Companies will work with you. You just have to, and the other thing is, if you have a credit card and you miss a payment, like, hey, I completely forgot to make the Kohl's payment, call Kohl's and ask them, they'll do a one-time removal, and if you have to, cry. Crying works. No, I'm dead serious, cry. Shed a little tear, get a little emotion in your face, or you'll be fine. But most companies will do they'll remove it one time. So why it might be worth it, you could get a lower rate if you have a solid repayment plan and you're aware of the repayment plan and exactly what they're doing. Like, ask the questions. How much am I giving you? Are you negotiating with my creditors? How is this working? And if it's legit, then that's okay. Don't secure it with any of your assets. And there are some, I know, there are some like nonprofits out there that do this all the time. You have this is everything. I am a big fan of NerdWallet. It's a great website. They compare everything. Car loans, credit cards, they're constantly, they're nerdy. Like they're constantly doing that. Credit Sesame is good. A lot of people use Credit Karma. You can, the thing about it is you can put a freeze on your report. You can do a lot. Like I have a freeze on Experian. So if Experian tries to pull my credit, I get an email that somebody's trying to access your credit. Did you approve this? All you have to do is click yes, click no. But you can monitor who's out there doing it. And these are the contacts for Equifax, TransUnion, Experian.
Why did you do that? Why did you put a freeze?
Because I got something in the mail that said I was, and everybody's part of the data breach. Half of our stuff is out on the dark web. But I got something in the mail that said something was compromised on, so I immediately, like some people just freeze all of their reports, which is fine. There's no cost to it. You just log in. If you like I get the alert that says somebody's trying to access your credit. Did you approve this? If it's a freeze, like what happens is when people apply for a mortgage, I won't get any scores, but it'll actually say this account is frozen. So what I have to do is email the borrowers and say, hey, could you unfreeze the account? And then I'll jump in. I have to delete the report and I'll go in and grab it again. But it's just another mechanism. No. And I think that if you have if you've had anything compromised, like your cell phone or anything, I would 100% either put a freeze on things or put an alert.
And that's available for all the bureaus, the Equifax, TransUnion?
You can freeze all of them.
Okay.
Yep, and sometimes people even forget. Other times what will happen is like borrowers will say to me, I unfroze it for a week. So that means I have a week to do what I need to do. You can unfreeze it indefinitely, but traditionally if you're working to do something, freeze it for a couple of days and then I don't know if it's automatic that the freeze goes back on or you have to connect with them. But with borrowers that I've worked with, it's like it takes them seconds. So I think they must email or they have it takes them seconds. So they're like, give me a moment. I'm like, okay.
Okay.
Yeah. It's good to protect yourselves.
Yeah. Well, it's just it's a flag.
Mm-hmm.
And then you're notified.
So I don't have a freeze, but I get an alert.
Yeah.
Yep.
And can you ask that? Can you just call these companies and say, would you give me an alert when
If somebody's trying to access my credit, could you get an alert? Or they're going to ask you what you want to do. But yeah. But if you have not looked at your credit, do your free credit report. If you get stuck on reading it, reach out to us.
Okay. What's the difference between the Vantage score and the FICO score?
It's the same.
Oh, it's the same? Okay.
It's the regular terminology's FICO, but the credit bureaus call it Vantage. It's the same thing.
I have a question about paying off a car.
Mm-hmm.
So how long does that negatively affect you because you're closing an account and you're no longer.
It is what it is.
Yeah.
I mean, with a car loan, it's called an installment loan. With any installment loan, once you come to the term of it, there's nothing you can do. So it will show as paid off. Most times with cars, you're going to get another one.
Yeah.
So it's kind of like twofold.
Does it hurt to pay it off early, like if you're close to?
No. I mean, like for instance, I have 4 months left on mine. I'm just kind of like riding it out because I like the fact that it's like really low. But you could, it's just going to show a closed and paid. It's really mostly like your credit cards. Like try to keep your credit cards long, even if there's zero. Like the one that I had since I was 25. It's been forever.
Well, I just had a Capital One close because I kept it at zero and it didn't use it. They closed mine.
So that's the other thing that they can do. So that's why you should try to keep a low balance. The credit card companies, they might have tried to reach you. Usually what they do is they say to you, do you want to use it? Like they're gonna kind of entice you. But if you've moved and stuff like that, they technically reach out and let you know that they're gonna do that. But now, exactly.
They're sending me stuff all the time.
They close now. Now you
Should I
gotta.
open it or no?
Can you? Will they allow you to reopen it?
Yeah.
I would. How long have you had it?
I had that one for a long
Oh, I would definitely. If they allow you to reopen it, take her out to dinner. And I would keep a small balance on it. Keep because that's the thing, is that's beautiful that they're allowing you to do that. Because usually what they do is they close you and go, want to apply for another account? Well, what happened to my 6-10 years of that? Yeah.
So, sorry, just to reiterate, I pulled up my credit-wise score while we were sitting here, and the thing that dings me the most is I had 4 hard credit scores pulled within the last 2 years, and that's like dinged me quite a bit. So that was kind of my question.
Where were you, like, what was it? Was it like auto loans or?
One was an auto loan, one was just like a pre-approval for a mortgage payment. I think that was it. Just 2 maybe.
Over 2 years, 4 inquiries isn't bad.
Okay.
It isn't. It really, like, if you had said I had done 4 inquiries in a month, that would be like, no. What is your score saying?
796.
Look at you.
I'm trying.
That's awesome.
But I was just curious. Okay.
Credit Karma also tells me that too with the hard inquiry.
Mm-hmm.
Yeah.
They say that too, so that's interesting.
I kind of think like that's their default.
I think she's right though, it doesn't really.
It's okay. That's.
They gotta tell you something.
Yeah, that was kind of.
They
my
have to say
question.
something negative.
So I couldn't figure out what about it was like too many. If that was the lowest part.
4 in 2 years is nothing.
Okay. That's
Yeah, you're good.
But Credit Karma did do me dirty in that I had a car loan and I've only had it for like a month in December, and they were like, refinance, we'll get you a lower rate on that. So I went to another company that was gonna give me a lower rate on the car loan, and they're like, you've only had this loan a month. We have to wait 4 or 5 months before we can transfer it over, and that created a hard pull that I didn't need to pull.
Mm-hmm.
So
You can't, yeah.
Their advertisement saying, do this.
Oh, that's what, yeah.
You know what I'm
Happened to
saying?
me with an Apple credit card.
Yeah.
interesting. Yeah.
But boy, Laura, I'm thinking, this should be something that's taught to all seniors in high school. When you think.
Well, it's funny
everybody,
because
right,
Matt
no idea about credit.
Parker, Matt Parker's a real estate agent, but he works for the city of Hudson, and I had sent it to him, and he said that he was sending it to the high schools and for us to go into the high schools. I just think people don't. People don't know that, and this stuff changes all the time.
It plays a huge role in our lives.
Oh yeah,
if you don't know.
credit in the U.S. is huge. Credit over in Europe is not. Like, they don't understand this concept, but there is ways. Like, your score is beautiful. That's a great score. Be proud.
Okay.
That's like a really good score. But I hope you found this helpful. If you have any questions, let me know. But we're done. Thank you.
Thank you, Caitlin.